Inflation in the United States has increased at its fastest rate in nearly 40 years, and prices are now almost 7% higher than a year ago. Sarah Walton has our top story.
The Consumer Price Index for November revealed a 6.8% increase in the cost of goods in the US over the past year. That's the sharpest rate of increase since June 1982, and it's bigger than analysts had expected. If you exclude food and energy prices, which is known as the core CPI, the increase was 4.9% year on year, which is still the fastest rise since 1991. Now, some of the biggest jumps were in energy prices, with the price of gas now 58% more expensive. Food costs are also up, with grocery prices climbing 6% more than they were a year ago. Federal Reserve officials say this jump is linked to supply chain shortages, coinciding with an increase in demand as COVID-19 restrictions have been lifted across the US. And now all eyes are going to be on the Fed when its board meets next week to see what action it will take to deal with this rising inflation. They had already indicated that they're going to begin easing off measures brought in to support the economy during the pandemic in order to counter inflation. It's thought they'll now announce a speeding up of those plans with the aim of raising short-term interest rates as soon as the spring if needed. Sarah Walton, CGTN, New York.
We're joined now by Liu Baocheng. He's the Dean of the Center for International Business Ethics at the University of International Business and Economics. Mr. Liu, good to have you with us. Despite inflation hitting an almost 40-year high in the US, stocks finished higher on Friday. How do you read into that?
Well, this is really a paradox because the Wall Street, look at the money side, and if money supply is there, they seem to have confidence, and actually, the more liquidity, the jubilee that the stock exchange would enjoy, at least for a moment, because it is very difficult. At least it takes a longer period of time for the money gathered to be translated into productivity. But the danger is that it may turn out to be merely a money game where productivity is not really supported in parallel with the stock exchange prices. So the key is that how the U.S. can really manage the balance between economic recovery and consumer confidence, and together with the material and realistic benefit that consumers can benefit. Not to mention addressing the trade issues with other major trading partners. So right now, it is really requiring a holistic approach to address this issue, not to mention the fiscal policy and monetary policy, but also their trade policy and economic integrity. So this is really quite a challenge to the political structure and economic direction.
And some analysts say that it's government spending, others say it's the supply squeeze that's leading to this big price hike. What actions can we expect from the Fed to bring it under control?
Well, supply is an issue because of the lockdown and because of the logistics that are getting so expensive, and especially now the rising commodity prices. But we are facing the same global picture, but China is doing pretty good in that, it is really still a blame on the management and also on the governance, as a matter of fact. If you maintain higher cost, particularly in artificial cost, for example, the trade tariff with major trading partners, of course, simply by relying, the giving money to people, injecting liquidity into the money market, that really definitely going to raise the inflation rate. So if you look at their projected confidence, the Fed wanted to keep 2% of the CPI or inflation rate, and now it's almost hitting at 7%. So this escalation is really very scary. It's not only scary to the U.S. economy, but also to the world economy, because the the size of the U.S. Economy and also impact on global economy. Now, so they have to do something. Either they have to raise the interest rate and or immediately stop the asset buyback, so that the liquidity has to be curved in that the inflation rate can be some sort of deterred. Otherwise, it's going to the whole economy is going to suffer, and consumer confidence is going to be winning. So therefore, we do expect they're going to take some moderate measures, by balancing the economic recovery and also the price that people and businesses are going to pay.